If you are looking to invest in regional Queensland right now, but you're finding it hard to find anything remotely valuable in your budget across the bigger regional centres, then this video is for you. Because today I'm going to share with you 6 smaller, more affordable regional centres that offer a lot more value for money right now and may be a great alternative marketplace for you to explore for your next investment purchase. Let's dive in. Before we dive in, let me quickly introduce myself. If you're an existing subscriber, welcome back, and I hope you get some value out of what's going to be covered here today, guys. If you are new to the channel, my name is Troy Sinbasini. I'm the owner and head of research of Life Buyers Agency. Now, Life Buyers Agency, we operate under 2 distinct brands across the regional centres in Queensland, working on the ground. So in Central Queensland, we operate under a brand called Capricorn Life, servicing markets like Bundaberg, Gladstone, Rockhampton, and Mackay. And then in North Queensland, we operate on the ground as Tropical Life Buyers Agency, servicing Cairns, Townsville, and the surrounding region. So we know what's going on the ground in regional Queensland and in these smaller, more affordable locations in particular as well, because we're actively buying for clients in these markets right now as well. So if you are an investor that you feel like you're struggling and you're jogging on the spot and you want to take a step forward in your property journey, I'm more than happy to have a chat with you or one of my team members to discuss if what we offer could potentially get you into the market sooner, buy something that's going to outperform the market, get you something that's off market and pre-market in an isolation of competition, and then get you an outstanding investment result. You can contact us on that website, visit us on that number, give us a call, and we can explore what's going on with your investment journey and see if we are able to add value, because we work with a lot of investors across the country and even internationally and help them navigate the regional Queensland property market. Thank you. Okay, so the marketplaces that I'm actively involved in along with my colleagues is basically the big 6 regional centres along the Queensland East Coast. So that includes Bundaberg, Gladstone, Rockhampton, Mackay, Townsville, and Cairns. Now, they are the big regional centres. But what I've done today is cherry pick or hand pick a bunch of smaller, what I call sub-regional markets that are in very close proximity to these bigger regional centres. And these markets can be a great alternative, particularly affordable alternative to investing in a bigger regional center right now, because your money could go a little bit further here. But I'm not saying these locations go and buy here willy-nilly. No, these are smaller markets, often with different economies, different fundamental drivers, and a different risk profile. So you just need to consider those options and consider what your preference is as an investor before you jump in and make a move in a sub-regional market. So starting with the first market today, which is a town called Emerald, which is about a 2-hour drive from Rockhampton. So this town of Emerald sits in central Queensland with roughly around 15,000 people and roughly around 8,000 dwellings. Now, I'm not going to dive in and cover what's going on in Emerald in terms of investment, infrastructure, spending, and looking at things from a macro perspective. No, all I'm going to be looking at today is micro level data. So what is exactly happening on at a property market level? I will leave that level of research aside for you to undergo yourself. What I'm going to cover here today is largely around how the median house price is trending, what the affordability index looks like, what's happening in terms of supply and demand of this market, and then what's happening on the rental side. So then we can look at this data and establish, is there a good opportunity here for me to potentially buy in a market that might be better and more affordable than a bigger regional center, and it could be a market that fits my profile a little bit better. So I'm just going to dive through the data today and establish what's going on there, so then you can figure out if this market is right for you, and then continue to explore and continue researching these markets. So let's start off with the median house price. So we can see here that the median house price in Emerald is roughly $488,000. Now, if we compare that to its bigger regional hubs that it's close to, it's within a 2.5 hour drive of both Gladstone and Rockhampton. Now, Emerald is the best part of 50,000 to 80,000 less people than those other markets. And if you actually compare now its median house price in comparison to those areas, it's the best part of $100,000 to $150,000 cheaper. So very much a more affordable market in central Queensland when compared to Gladstone and Rockhampton, its big regional centres it's in close proximity to. So let's have a look at how this median house price has been trending in the last 12 months as well as the last 5 years. So we can see here that the year-to-date median house price has grown by 11.7% in Emerald from 418,000 to 488,000, so totaling a total growth figure of 70,000 in the last 12 months. So as you can see here, Emerald, despite it being a smaller town, a little bit removed from the bigger regional centers, it's a market that has been rising over the last 12 months. Now, if we actually look at it from a 5-year trend, we can see here that the last 5 years, the median house price has grown by 74%, and that's come off a base of around $363,000. So we can see that the median house price has been certainly moving in a market like Emerald, a smaller sub-regional market. Often these markets get overlooked by investors because they get put into a bucket of them being a little bit removed from the bigger centers, as well as often classed as mining towns. I'm not saying that Emerald is not a mining town. All I'm saying is that over the last 5 years, these markets, or this particular market, has been growing when a lot of people, in fact, write these smaller areas off. Now, in terms of that median house price at $488,000, I think that's a very affordable market still, considering the type of demographic that lives out there. Like I said, it's probably a bigger mining center, or it is an economy largely dependent on mining. But I'm not to say that I'm not going to call it a mining town, because I know a lot has changed in Emerald as a township over the last 10 years. But for that median to sit at $488,000, I know a lot of people that live in the area tend to have high household incomes as well. So that median house price relative to incomes in the area is in a very affordable median. And when you look on the ground, and we're buying properties right now for clients in this market, what I find is that across the board, 4-bedroom, 2-bathroom brick homes are a lot more affordable in Emerald than they are in Gladstone and Rockhampton. You could get a brick home in Emerald, roughly around 20 years old, for low 500,000s right now, as opposed to that same property. You pick that same property up and you put it in Rockhampton or Gladstone, and you're paying $100,000 or $150,000 more. So your dollar does stretch a little bit further in the market of Emerald. And I encourage you to jump on Real Estate and Domain and look at some recent sales to see exactly that. Now, moving on, if we actually look at how things are trending on the demand and supply front, then we might be able to get a picture as to why this median house price has been growing the way it has over the last 12 months. And it often comes back to low levels of supply and high levels of demand. So let's see what that data says now. So days on market currently sits at 30 days. So right now, Emerald, I would call it a rather hot market. So it is moving, or stock is moving very fast. And I know this right now, as we've been attempting to buy there, that things are selling within the first few days. So you have to be quick if you are looking at potentially exploring this market. If we looked at it in terms of how it's been trending over the last couple of years, so year on year, it's dropped from 41 days. So we've had a spike in demand here over the last 12 months. And then over the last 5 years, it's dropped from 120 days. So demand has really heated up to this market now, where properties were taking like the best part of a couple of months to sell, now down to a few days. So that's a good thing. It's one ingredient you need for capital growth, obviously, is strong demand. Now let's look at the supply front. So stock levels in the town of Emerald are sitting at 0.4%, roughly 27 listings right now on the marketplace, and inventory levels are sitting at 1 month. So from a supply front, guys, these numbers are very grim, and this market is in very low supply. So we can see low supply and strong demand. That's obviously attributed now to what's happened over the last 12 months with this median house price growth. And if this trend continues to maintain itself, we're obviously going to see this market continue to grow, definitely, as those fundamentals stay intact. We can see in terms of its listing volume, so listings have actually decreased as well. So we've seen a 20% drop from this time last year to have the amount of supply that's on the market right now. So the trend has been that supply has been contracting as well as demand increasing. So again, the right ingredients for capital growth in this market. And in terms of the rental side of the market, we can see here that rents have increased 2% over the last 12 months, and it's grown from $490 to $500 per week. And I encourage you to look at individual properties on a case-by-case basis, because the opportunities that we've been exploring lately in Emerald, particularly the 4-bedroom, 2-bathroom newer homes, I know they are getting close to $600 per week rent. So I encourage you to do your individual research when looking at investing in this market, because there's definitely rents that are outperforming the median right now in this marketplace. Now, the rents have been growing, and why has that been the case? Often vacancy rates plays a part in that. So we can see here that the vacancy rates are currently sitting at 1% for the town of Emerald, and it's actually down from 3.5% over the last 5 years, or 5 years ago. So we've seen a downward trend where there's been a contraction of supply now on the rental side of the market, and that's putting upward pressure on rental growth. So very encouraging signs here for a market like Emerald, where there's roughly around 15,000 people and roughly around 8,000 dwellings. I think it's a good opportunity for those with a budget of around $5 to $550, where you can still buy a more newer brick home, lower maintenance with a good yield. And this market definitely offers more value for money when compared to Gladstone and Rockhampton. Okay, moving on to the next sub-regional market, which is called Bowen. So Bowen is located, excuse me, in the Whitsunday region. So you're looking at roughly around a 1.5 hour drive from Early Beach, and you're looking at roughly a 2-hour drive south of Townsville. So very well located in terms of where it is in the beautiful Whitsundays. Roughly around 10 to 12,000 people, consisting of roughly around 7 to 8,000 dwellings in the area as well. So again, a beautiful part of the Whitsundays. So we can see here that the median house price for Bowen sits right now at $538,000. Now, when you compare that to its big regional centers that it's in close proximity to, being Early Beach as well as Townsville, so you're looking at the best part of a couple of $100,000, probably $300,000-$400,000 cheaper than Early Beach, and you're looking at about $200,000 cheaper right now than Townsville. So very much an affordable little brother when compared to those bigger regional centers it's in close proximity to. So we can see here that over the last 12 months, the median house price has grown in Bowen by 10.5%, and it's actually grown from $486,000 to $538,000 to what it is now, resulting in roughly around $50,000 in growth over that 12-month period. So a market on the rise here as well, similar to Emerald in central Queensland. Now, over the last 5 years, in terms of how this median has been trending, we can see a total growth rate of about 88%, and it's come off the base of 285,000. So only 5 short years ago, a very, very affordable market, to now sort of sitting around sort of $500,000 right now. So it's had a pretty big run over the last couple of years. It would have been nice to invest in this market a little bit earlier, but it would have probably took you a long time to start to see these results, particularly if you bought before 5 years ago. And I do think that there's still a really good buy window in a market like Bowen, because one thing I noticed when you compare Bowen to, let's say, a market like Emerald, I like Bowen a little bit better because of the lifestyle factors that it offers. So Bowen is situated on the coast, so it attracts a lot of retirees and those that want uh, a retiree type lifestyle in a smaller regional centre, and it's a great alternative to somewhere like Early Beach or Mackay, Bundaberg, even somewhere like Cairns and Townsville as well. Bowen is a more quieter option. And you got that sort of subtropical weather there too, which is a bit different to what you get up in Cairns and Townsville, which is a little bit more warmer and more humid. So we can see here that from a demand and supply side, that it's taken roughly around 50 days for most of the stock to sell there. So it's not a market right now that's completely boiling hot. I think you still have a bit of time to navigate this market if you are potentially going to explore this market. But I do know on a case by case basis for when we have bought property there this year, there are certain pockets of Bundaberg where properties are flying off the market in a matter of days. So you have to just treat everything on a case by case basis. I do know Bowen consists of a lot of older post-war homes, Queenslanders, as well as cottages. They tend to take a little bit longer to sell than the average brick and tile home. So I think that right now is skewing the data and dragging up that day on market average, where I would say most of the good modern four-bedroom homes have a tendency to sell rather quickly. So just be mindful of that if you are looking into potentially buying in Bowen right now. And we can see year on year, so demand is actually starting to decrease. So last year it was 77 days, and then 5 years ago, most things took around 150 days to sell. So the demand is certainly heated up in this market, but it's not a complete frenzy. So there could be a window of opportunity for you to potentially go in and buy a property in this market because it's not a complete frenzy right now. Now, from a supply perspective, we can see here that stock levels sit at 0.2%, which is roughly around 30 listings, and the inventory levels are sitting at 2 weeks. So, from a supply perspective, it is a very, very tight market. But what we're seeing on the demand side is not a complete frenzy. So it's a little bit different to what we're seeing in Emerald. So from that respect, if if we continue to potentially see the trend going down, where days on market gets a bit tighter, and then this trend of stock remain constant or even get tighter, then we might just start to see more aggressive house price movement. So we've seen the market go up by 10% over the last 12 months. If days on market continues to decrease and demand really heats up and starts to go level with the amount of supply in the marketplace, I think a market like Bowen could potentially do double digit growth again this year. I would say above 15% if demand continues the trend that it's on. So there could be a great window here potentially for you to potentially come into this market and make some short term gains. And if we actually look at listing volumes in terms of the stock levels and its consistency or trend over the last couple of years, we can see here that it's been averaging around 30 properties per month for the last 2 years. So supply has sort of found a balance of around 30 properties each month. It hasn't decreased, it hasn't increased. And now we're starting to see the trend of demand go down. So the right ingredients are starting to come into play here right now. I wouldn't say this is a hot market. I would say this is a warm market, and often warm markets are really good markets to buy in. But as I said before, just be mindful of sometimes some of the nicer properties in the better pockets tend to go pretty quickly. So if you look to buy here, just be mindful of that. And what you'll actually find is majority of the newer brick homes in the better located areas are selling for mid to high 500s now, and most of them are returning roughly $600 to $650 per week rent. So you're getting around a mid 5% yield return in this marketplace. Now we can see here rents have increased over the last 12 months by 5.6%. So it's a growing rental market, which is great. And it's grown from $530 per week to $560 per week. But as I said, the better homes are getting a lot more than that median right now. And we can see the vacancy rate is super, super tight. So 0.6%, roughly 10 listings. And that is a really tight rental market. As I said, roughly around 7,000 dwellings. You're within a 2-hour radius to Townsville, so people can even commute there on a weekly basis for work. And then you're in close proximity to the Coal Basin around the Whitsundays as well. So a lot of people use places like Bowen as a base for swing rosters on the mine. So that tends to put definitely downward pressure on vacancy rates as well. But to only have 10 listings available at any given time right now, it's a market where rents, I think, are really good. And if you invest in this market, you can get some confidence that your property is not going to be left vacant for a long period of time. Okay, the next sub-regional town we're going to look at is a place called Charters Towers. So Charters Towers is located about an hour and a half west of Townsville. So again, in that Townsville, North Queensland region. Obviously, Townsville over the last couple of years have done some big numbers, and it's becoming more and more unaffordable for investors to go in there and get a good deal, particularly under $600,000, because the market has moved so much, and it's also very difficult to get a strong rental yield in towns. You've got to really hunt around for those stronger rental yield properties. But just 1.5 hours west, you could potentially invest in a market like Charters Towers. Roughly around 12,000 people with about 6,500 dwellings. So it's a pretty big hub within close proximity to Townsville. And I know a lot of people commute into Townsville on the daily from Charters Towers for work, and Charters Towers is another town similar to Bowen that is a bit more of a gateway into sort of the Gulf or mid-central west of Queensland around the Mount Isa region as well, because you're in close proximity to a few mines in that area as well. So it definitely feeds into that central west district of Queensland. Now, we can see here from a median house price perspective, currently sitting at $374,000. Now, Townsville being 1.5 hours away, you're looking at the best part of at least $200,000 to $250,000 more expensive. So definitely a great affordable option in the Townsville region, sitting at $374,000. Now, in terms of how this median has been trending, we can see here that over the last 12 months, it's grown by 12.4% from $333,000 up to $374,000 now, which is roughly around $41,000 in growth. So this little market definitely humming, probably following the same tune as Townsville, but just maybe not as aggressively. But what I have been seeing though is, as Townsville has become more expensive and as the rental market has also become more expensive, we are seeing a transient population move out of Townsville and into Charters Towers and capitalizing on that affordability. But I'm talking about home buyers here, as well as downsizers or retirees. I haven't necessarily seen a big influx of investors move into Charters Towers as of yet. I know just from speaking with agents, there's sort of a small cohort of investors that like to buy in certain parts of Charters Towers right now. But across the board, the investor activity hasn't been as high as Townsville. So its median house price in terms of how it's been trending, we can see here that over the last 5 years, it's done 59% and come off a base of $234,000. So still a very cheap market despite it doing 59% in growth. And I think it's a market with plenty of upside just due to that proximity to Townsville. I think this market could potentially have at least another 20-25% in growth over the next couple of years. But that's just me talking out of just what I'm seeing on the ground and sort of the trends associated with those population movements in the area. I think Charters Towers is going to be a great beneficiary of that. And given its affordable nature, a lot of people are going to be capitalizing on that. Is this median going to do that right now still, that accelerated growth we have seen over the last 12 months? Looking at the supply and demand trends, we can see that demand isn't that great. Like it's sitting at around 78 days currently for things to sell in the area. And year on year, though, it's dropped significantly. So demand has definitely hit it up. 12 months ago, it took an average of 156 days for a property to sell. Now it's virtually half that at 78. And then if we actually look at the trend from 5 years ago, it was around 177 days. So pretty much it's really heated up over the last 12 months. And I expect the 78 days to at least halve again over the next 12 months. So I think it is not a hot market in terms of demand. I think it's more of a warmer market. It could provide a good entry point into the market if you want to buy in an alternative market and still be close to that sort of booming Townsville region. We can see here that stock levels are tight. So on the supply side, supply is low at 21 listings and sitting at 0.2% and inventory at 2 months. So I'm really happy with how supply levels are looking. We just haven't seen that same aggressive demand as what we've seen in Townsville. But then that opens up an opportunity for you as an investor to potentially enter into a market that isn't a frenzy, that isn't hot, that is more on the warmer side when it comes to demand. But the right ingredients are there with low levels of supply. And in terms of how that's been trending, we can see here that supply has been trending the same for the last 3 years. So all we really need now is for demand to ramp up for it to really take off and put a rocket up that median house price. And given the affordability, like I think this median could easily push up into that 550,000, similar to Emerald in the next couple of years. So I think it's a very opportunistic market, but again, it comes with its own risks, and just be mindful that you are investing in a smaller sub-regional market, but you're still close to the Townsville regional centre there. We can see here that rents are rising as well. It's done 5.6% over the last 12 months, growing from $530 to $530 per week to $560 per week, so a $30 increase there. So rents are on the rise, and vacancy rates seem to be very, very tight as well, sitting at 0.1%, only 5 listings. And as I said, you're looking at roughly around 6,000 dwellings in the area, and with a population of about 12,000 people, to only have roughly 5 properties a month on the marketplace at any given time. Like, those supply levels are really, really grim. And as I said, a lot of people are moving into the Townsville region, and a lot of people are moving out of Townsville to move into affordable markets like this because they want to rent where it's a bit more cheaper and live where it's a bit more cheaper, but there's just not enough supply here at the moment. So rents are good, are growing, and vacancy rates are tight. So for me, I'm seeing all the right ingredients here for a market that's warm to potentially transition to a market that's hot. Okay, we are now moving into the far north Queensland region, and this particular sub-regional hub we're going to be looking at today is a town called Atherton, located in the Tableland regions in far north Queensland, roughly around a 2-hour commute from Cairns. A beautiful part of far north Queensland, that's for sure. Roughly has around about 15,000 residents and about 8,000 dwellings in the town itself. Now, Atherton, a beautiful part of the world. I actually had a fair bit to do with Atherton growing up in far north Queensland. Used to go up there a lot to play footy, used to go to a lot of the swimming holes and waterfalls around the area. A beautiful part of far north Queensland for sure. And what I've found anyway is that over the last couple of years, I would say post-COVID, we've seen a lot of people moving from Cairns into the Tableland regions, particularly retirees and particularly those that wanted to live on acreage have pushed up into that Tablelands region around Tinaroo, Yungaburra, Atherton and Tolga. But we're also seeing a massive push for a lot of people moving into markets like Atherton as well, because Cairns has gotten very expensive, and there's a lot of people actually commuting daily from Atherton to Cairns for work now. So it has a very big sort of transient population that moves to and from Cairns on a daily basis for work itself. So Cairns, as its big regional hub, Atherton definitely benefits from that as well, with its population commuting daily for work, a large portion of its population. So we can see here that the median house price in Atherton currently sits at $539,000. Now, if you compare that to Cairns, you're looking at close to $700,000. So it's very much an affordable option to Cairns right now, a couple of $100,000 cheaper, that's for sure. Its median house price has grown by 4.9% in the last 12 months, from $513,000 to $539,000, so roughly around 26K in growth. So it hasn't knocked its socks off over the last 12 months. But over the last 5 years, we can see it's done a total of 68.9% from 319,000. So the 5-year trend has been good, but the last 1 year hasn't been as strong by the looks of it. But maybe there could be an opportunity there where there could potentially be an opportunity where this year and the year after is moving more towards double-digit growth, depending on how the demand and supply trends are looking. So if we look at the demand trends now, we can see that properties are taking roughly 45 days to sell currently, and it's actually dropped from last year's 70 days. So demand has certainly heated up here over the last 12 months in Atherton. And then over the last 5 years, well, pretty much 5 years ago, was sitting at 130 days per week. So right now, 45 days, I wouldn't say it's a market that's a complete frenzy or really, really hot. I would say it's definitely moving away from warm into a hot market, because most things that are taking roughly 45 days to sell are probably sitting on the market for the best part of a week and a half, which still isn't a lot of time in the grand scheme of things. Now, Atherton, in terms of like where I see good value, like it's a beautiful part of the world. And as I said, a lot of people moving up from Cairns into Atherton for the affordability, but for that more rural lifestyle as well on the bigger blocks, where you can have like chooks and things like that on your property. So people are moving towards these rural residential parts of Atherton. But in terms of like the general residential, what you can get in and around Atherton in the new and older estates on the residential blocks of between 600 to 1,000 square meters, most of those 4-bedroom, 2-bathroom homes built sort of in the last 30 years are selling for low 500s, mid 500s. And if you actually look at those properties compared to maybe what you could get in Gordonvale, let's say in Cairns, Edmonton, Bentley Park, like those properties are the best part of at least $100,000 to $150,000 cheaper. So a lot of affordability and good value for money with the brick configuration in Atherton right now. Now, if we look at its stock levels, we can see that right now 0.2 stock, which is very tight, by the way, sitting well and truly under 1%. And that equates to roughly 10 listings right now, with the total inventory pool sitting at 1 month. So from a supply perspective, it is a very low supply environment. And as I said before, you're looking at roughly around 7,000 to 8,000 dwellings. To only have the best part of 10 listings a month is a very tight market when it comes to supply. And inventory sitting at 1 month, I've looked at the trend and it's been contracting year on year for the last few years. So it's definitely shown that demand over time has started to chew into that inventory pool, and the listing volumes now, I think if that remains consistent at 10 listings and demand continues to heat up even more, I think we're going to start to see this median house price like move into that double-digit growth category. I think it's definitely got the ability to do that over the next 1 to 2 years. If we looked at like the listing volume trend, we can see that yes, 10 to 15 properties per month for the last 2 years. So in a very low supply environment. And as I said, it's not like a big town, but in saying that, has a very big transient population, a lot of people moving into that area. And I think investors have slept on this market because not too many people know about it, but I think there's some opportunity there, particularly for those brick homes, for people to capitalize in a place like Atherton. If we look at the rents have done 9% over the last 12 months, it's increased from $446 per week to now $490 per week. So the rents are on the move there, which is good. And from what I've seen with the data, you can get a good 4-bedroom, 2-bathroom brick home, relatively modern, for around that mid fives as well. So the better quality stock is pulling between $550 to $600 per week rent as well. Not the same premium as Cairns, slightly more affordable, but you're going in with the lower purchase price as well. So those yields tend to be a bit more juicier than what you could potentially get in places like South Cairns, Gordon Vale, Bentley Park, Edmonton, etc. If we look at the vacancy rates sitting at 0.5%, roughly 7 listings, so super tight vacancy. And that trend over the last 6 months, it's actually dropped, and we've seen year-on-year vacancy rate drops now from as high as 3% down to sitting well below 1%. So from a rental market perspective, Atherton is looking very good as well. So across the board, data is looking solid. Like that median house price hasn't done crazy things. Like it's been a pretty quiet 12 months, but in saying that, demand is really starting to heat up and supply is really low. So the right ingredients are there if you're willing to be an opportunistic investor. Okay, staying in Far North Queensland, and now we're looking at the Cassowary Coast. So Cassowary Coast, basically that's made up of a number of small towns south of Cairns, within, I'd say, an hour and a half proximity to Cairns. So this is southeast as well. So you got towns like Innisfail, which is on the Cassowary Coast, Mission Beach, Bramston Beach, places like Tully are also included in that. And roughly all of those towns make up about a population base of about 20 to 25,000 people. And then you're looking at about sort of 10 to 15,000 dwellings amongst the Cassowary Coast as well, and a beautiful part of Far North Queensland as well, particularly the Mission Beach area, very beautiful part of Australia, that's for sure. So if we look at the Cassowary Coast, its median house price currently sits at $502,000, and over the last 12 months, we've seen its median grow by 8%, from 462,000 to 502,000, roughly $40,000 in growth there over the last 12 months. Now, this is aggregated. As I said, it's you got a number of different little towns all sort of clunked together to aggregate this data. I couldn't find data where I could isolate Tully versus Mission Beach versus Innisfail and pull the data out for each of those individual towns. So I don't know what each of those individual towns have done, but collectively, when you bundle it all together, they've done roughly around 8%. So it says to me, most of those towns are sort of between 4 to 6%, maybe one or two around 8 to 10%, and it's aggregated to around 8% in terms of growth for the last 12 months. So just make sure, if you are interested in potentially investing in the Cassowary Coast region, like just jump in and look at specific sales around Innisfail and Tully and see what the market is doing there, because I wasn't able to extrapolate that individual data. But nonetheless, this will give you still a really good insight, I think, nonetheless, into the opportunity that sits on the Cassowary Coast. And I think there's a great opportunity here in the Cassowary Coast, because it's still within a 1 hour radius of Cairns, right? And it's on the main highway, so you can get there fairly quickly. And similar to Atherton, we're seeing a lot of people again now move to markets like Innisfail, Babinda, and Tully and commute daily into Cairns, and then move into these markets because, number one, it's affordable both to rent and to buy. And then you obviously get those additional lifestyle factors as well, being in that smaller town, still on the coast. If you own a boat, if you love to swim, and if you love to go bushwalking and things like that, then like this market offers so much for those people with those sort of lifestyle demands. And it's been very popular from that respect. And look, I think after Cyclone Yasi, like this area took a really big hit, and it was sort of down in the dumps for a number of years, but I think it's really starting to gain some momentum now, some traction. And as Cairns becomes more expensive, places like this become more ideal. And if you actually look at the Cassowary Coast, it's the same proximity and rate and radius to what the Port Douglas region is to Cairns. Port Douglas is 1 hour north of Cairns, and if you look at the median house price aggregated between between Port Douglas, sorry, and the Mossman area, like the median house price is like $1 million. But you can go 1 hour south and you're paying half of that, right, for houses on the Cassowary coast. So that's where I think great opportunity sits. It doesn't have the same tourism drivers as Port Douglas or Cairns, but it's still an area that has a lot of potential for that to really gain some traction, I believe, over the next coming years. And then, like, it's a big agricultural hub as well. Bananas and farming all through the Cassowary coast is very uh, prominent there as well. And you have sort of a transient population that come in and pick fruit and backpackers and the likes. But I do believe because Cairns has gotten more expensive, like people are pushing in here, and I think that's where the opportunity sits. And if we look at this median house price, we can see, yeah, 502,000, and over the last 12 months, it's done the 8%. And if you actually look at like individual properties that are sub 600,000, what you'll find is that those, let's say, typical 4 bedroom, 2 bathroom brick homes, most of those are selling for like 500 to 550. And if you compare that to Cairns, again, similar to like what we've discussed in Atherton, you'd pay 100 to $150,000 more for that same property. So people are coming here because of that opportunity. I think that's where the opportunity for you might be as an investor to buy something at that lower purchase price and capitalize on the potential upside that this market brings. So we can see here that over the last 5 years, that median has done 48.9%. So it hasn't done the same as some of these other regions where they've done like over 60, 70%. So it's underperformed from that respect. But in saying that, that means that there could be still a lot of growth left in this market. But nonetheless, the 5 years it's been trending up, which is a good thing and what you want to see in a marketplace like this. The demand side of the market currently sits at 70 days or 69 days on market for things to sell. Year on year, it's dropped from 100 days, so demand has heated up over the last 12 months. Then over the last 5 years, it's definitely heated up as well. It's dropped right down from 144 days. So the trend has been good here from a demand perspective. And it's, look, I wouldn't call this even a warm market. I would say it's just getting close to warm now from a demand perspective, sitting at roughly 69 days. But again, this is all aggregated here. Innisfail, Tully, Mission Beach, the data could be different. Like properties could be selling a lot faster there. So just go in and do your individual research and look at things on a case by case basis. Okay, guys? Stock levels sitting at 0.4%, so a really low supply environment. You're looking at roughly 72 listings there across those aggregated towns, and inventory levels sitting at 3 months. So, look, still sitting well below 1%, which is a good thing from a listing volume. That inventory pool is roughly around the Australian average, around 3-4 months. Usually when it starts to dip below 2 months and 1 month is when you know like supply has really started to contract. But I'm seeing all the right ingredients here. I'm seeing like low supply levels, the inventory pool starting to tighten, and then the days on market dropping. So again, as I said, it's not a warm market, but it could be potentially moving into a warm market. And if you are an investor and you're opportunistic, you can potentially capitalize and get in before things start to really heat up. And as I said, I think there's so much value down in this part of the world in far north Queensland. And it's just been forgotten about because of Cyclone Yasi 10 years ago, I believe. Now, if we look at the rents and what they've done, so over the last 12 months, they've increased by 30%. So they've really ballooned over the last 12 months. And again, because of affordability, I believe people are pushed in and vacancy rates have really contracted, has put upward pressure on prices. And if you look at those median rents compared to what you can get in Cairns, you're $100 to $200 per week better off, you know. So a lot of people are pushing into this area to rent in these properties and benefit from that affordability, I suppose. And then the vacancy rate sitting at 0.8%, so roughly around 17 listings in a town like Innisfail or Tully, as well as Mission Beach, aggregated there around 17 listings. So still very tight all around, considering those towns have their own little economies. They have like some really good big employers in those areas. They have a lot of really good lifestyle drivers. They have big transient job markets. To only have the best part of 17 listings available at any given time across the Canberra coast just goes to show that's a really tight rental market. And I think you'll have no problems buying an investment here and it getting rented. It will be rented, that's for sure, based on these numbers. So yeah, again, we've seen the median house price trending the right way over the last 12 months and then over the last 5 years. Demand really heating up, supply starting to dip as well. So all the right ingredients here to suggest that the market is starting to take a turn on the Canberra coast, and it could be an opportunity for you as an investor. Now, the last Far North Queensland regional centre we're going to be looking at is a town called Mareeba. So Mareeba is similar to the Atherton township, is in the Tablelands region, situated in the Tableland regions around Cairns. So you're looking at roughly a 1 hour commute from Cairns as well. Very similar type town to Atherton. I think Mareeba and Atherton are only about 30 k's apart from each other, so they share a lot of similarities, but they still are different towns and in their own right, different property markets as well. So we can see here that the median house price for Mareeba currently sits at 557,000. Over the last 12 months, it's grown by 10.6% from 498 to now 557, roughly around 60,000 in growth. So over the last 12 months, it's definitely been on the move. And I think, look, similar to Atherton, a lot of people are now priced out of Cairns. Similar to the Canberra Coast region, they're pushing into markets like Mareeba. And Mareeba, again, offers a lot of those same lifestyle drivers as Atherton. I'd probably say it's a bit more savanna rather than tropical. Atherton's a bit more tropical and rainforesty, whereas Mareeba you tend to more outback living. But Mareeba has been very popular. I know a lot of my mates that I played footy with that lived on the Cairns northern beaches that actually ended up living in Mareeba and moved to Mareeba because it was actually cheaper to buy land up there and build, as well as it was better for them to run their little businesses as tradies in a smaller market like Mareeba because it's less competition than Cairns. So I think Mareeba's really benefited from the proximity it has to Cairns, and a lot of people, are still moving into that area for affordability reasons. But again, a lot of people, because Cairns has gotten so expensive, are willing to commute daily to Cairns as well. I know people that live in Mareeba that are commuting daily to places like Gordonvale, which is another 20 k's south of the Cairns CBD. So they're driving from Mareeba through Cairns North, through the Cairns CBD, and then getting to places like Gordonvale just to work. So yeah, people are willing to drive a long way in order to, enjoy the lifestyle that Mareeba has, as well as to be amongst affordable living opportunities as well to rent and to buy. Now, over the last 5 years, we can see that the median house price has grown by 68.2%. So definitely on the rise and trending the right way, both in the short term and over the last 5 years. And it's actually come off the base of $331,000. Now, Mareeba, if you look at those homes around Mareeba, a lot of the newer stuff that's been built in sort of the last 10 years, you have to pay a little bit of a premium to get into those. They're about 600 plus now, but I know the town is still full of a lot of old Besser block homes and some of the stock that's been built maybe 25 plus years ago, and you can pick them up for sort of mid to low 500s as well. And if you want something on the much more older side, you've got cottages and Queenslanders that you can pick up for like between 300 to 400,000 dollars. So depending on what you're after, I think Mareeba has a cross section of different opportunities available there. But again, a lot of those 4-bedroom, 2-bathroom brick homes, 20 plus years old. If you're looking at, let's say, alternative markets like Cairns, Northern Beaches, Smithfield, Redlynch, where else, Caravonica, like those brick homes there are selling for north of like 650, 700,000. So you're looking at a much more affordable market in Mareeba for sure. So you're going to definitely get better value for money with what you could buy in Mareeba as opposed to Cairns North. If we're looking at the demand side of the market, we can see here that's taking roughly 85 days currently for things to sell. And year on year, it's been no drop. So demand has remained relatively consistent there. But in saying that, at 85 days, I wouldn't call that a hot or a warm market at all. I would say that's just outside of a warm market. And then over the last 5 years, it's dropped from roughly around 130 days. Look, this is something to keep an eye on, I suppose, if you are looking at a market like Mariba. I know, again, as I said, a lot of the older stock, the really cheap stuff, and also a lot of the farmland that is in Mariba tend to sit on the market for a lot longer than the conventional family homes or the residential stock. And that has a tendency to drag up the down market average. I think if you take a lot of those older homes out as well as the farmland, what you'll find is that most of the residential stock that is more newer are selling in roughly 30 days. So they're all going under contract within sort of the first week. So just treat everything on a case by case basis if you are looking to buy there. But at an aggregate level, like this says to me that, yeah, the market is just sitting outside warm right now in terms of demand. Stock levels are as tight as they come, 0.2 with 28 listings roughly per month, or 25 listings currently right now, and inventory levels sitting at roughly around 5 weeks. So you have like a really low supply environment right now, but inventory levels are sitting at roughly 5 weeks. So yeah, it's really, really low supply levels, and those inventory levels sitting at around 5 weeks as well suggest to me that really over time it's started to contract. And if you actually look at the data, it used to be up to 6 months, the inventory pool in Mariba, but now down to 5 weeks. It just goes to show that over time, people have started to chip away at all of the available properties, and it's the pool of properties to buy has become smaller and smaller. But if you look at the listing volumes, they've been sitting around sort of 40 per month over the last 2 years. So that's sort of been a consistency with that supply level, which is roughly around 0.2 to 0.4%, and then the day on market remaining constant. So, like from a demand and supply perspective, I'm not seeing anything special here. I think if you are looking at a market like Mariba, you just got to look at everything on a case by case basis, because I'm not seeing an opportunity to buy here. Yes, the supply environment is low, but given that the day on market hasn't changed year on year, suggests to me that demand hasn't really heated up enough to put upward pressure on these house prices. But again, as I said, if you just make sure you treat everything on a case by case basis, because there could potentially still be good opportunities around. If we look at the rental side of the market, rents have skyrocketed over the last 12 months by 14% from 400 to 464. Rents on the rise. But if you look at these rents in comparison to Cairns, a very affordable rental market, and that's why a lot of people have moved into markets like Mariba. And if you look at that vacancy rate, 0.9 with roughly 10 listings. So, and it's actually been sitting around 0.9 under 1% for the last 2 years. So the rental market has really contracted here as well, and that's obviously putting that upward pressure on those rents. So look, I'm seeing a few good signs here, but ideally I would love to see demand, those day on market figures a little bit lower, and that inventory pool get a little bit more tighter from 5 weeks maybe down to 3 weeks, and that's when you know things are really starting to heat up, and when you might start to see like that double digit median house price growth. But I'm just not seeing enough here right now. But again, there could be an opportunity on a deal by deal basis here, guys. All right, guys. Well, that's all from me. Thank you for sticking around to the end, and I hope you got some valuable insights from what was covered here today. I don't usually touch on the sub-regional centres that often, but as I said at the start of the video, I know a lot of people are beginning to get priced out of the bigger regional centres in Queensland, and are now potentially looking at other markets, and these ones could potentially be a suitor for you. But as I said, they're all different. They all have their pros and cons. I think you need to also go in and look at what's happening in these markets at a macro level. What are the drivers? What are the fundamentals look like before you make any decision as well? Because you want to make sure the macro marries up with the micro. And as we looked at a lot of these individual markets, like the micro data is looking pretty good and is painting a pretty good story across the board. But what you want to do now is make sure that that micro data marries up with the macro around infrastructure spending, economic health, job vacancies, things like that, population movements, trends. And I think if you can marry the two together and things look good, that's when you know your risk mitigation is starting to go down, and then the potential upside maximization is there for you guys as well. But again, guys, my name is Troy Bassini. Thank you, and I'll see you guys on the next video. And if you do need help buying property, feel free to reach out to us on this number or those websites. Cheers, guys. Thank you.